Good evening, everyone. Welcome to the channel. Today I am going to talk about Buckle Inc. quarterly report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. The Buckle Inc. offers a wide range of businesses and services, including retailing casual apparel, footwear, and accessories for men, women, and kids marketing brand, name casual apparel from various brands providing private label merchandise under 24 different labels offering services such as plus hemming and gift packaging plus layaways plus guest loyalty program plus Buckle private label credit card plus personalized stylist services plus special order system for obtaining requested merchandise. These businesses and services are available through its stores, website buckle.com, and online order fulfillment center. The significant increase in Buckle Inc.'s stock price by 46.54% in the past year can be attributed to several key factors. Strong financial results, including a 14.3% year-over-year net income increase and an 8.3% rise in net sales, have contributed to the surge. Additionally, favorable analyst actions, such as upgrades and price target increases from UBS Group and Wall Street Zen, have boosted investor confidence. The company's strategic investments in digital growth, including AI/AR tools and virtual fitting rooms, have also driven e-commerce sales up 17.7% year-over-year. Buckle's strong financial position, with a debt-free balance sheet and significant cash reserves, has provided flexibility for future investments, further supporting the stock price increase. The primary drivers of revenue growth for Buckle Inc. are the increase in net sales by 3.1%, online revenues rising from 13.1% to 14.6%, and strong performance in denim and casual bottoms categories, with increases of 3.8% and 54.5% respectively. On the other hand, revenue decline is driven by a decrease in comparable store sales by 0.9%, as well as declines in footwear and sportswear/fashions categories, with decreases of 5% and 3.6% respectively. Net income and profit margins. A shift in performance. The financial performance of the company has undergone significant changes over the past year. Notably, net income has increased by $5,751 for the 13-week period ended August 2, 2025, and by $6,101 for the 26-week period compared to the same periods in 2024. However, this growth is not reflected across all profit margins. The gross profit margin decreased due to a higher cost of sales as a percentage of net sales. Conversely, the operating income margin increased from 18% to 19% for the 13-week period, indicating improved operational efficiency. The reasons behind these changes are multifaceted, with increased sales and or cost savings contributing to the rise in net income. In contrast, higher selling expenses and general administrative costs have negatively impacted profit margins. These factors highlight the complexities of financial performance and the need for ongoing analysis and improvement. The company is indeed generating positive operating cash flow. This can be confirmed through various financial summaries and calculations across multiple pages of the report. Specifically, the operating cash flow is calculated to be $68,257, page 2, with net cash flows from operating activities also being positive in both periods, $89,412 and $77,488 on pages 5. Additionally, page 16 shows a total of $89.4 million in net cash flows from operating activities for the second quarter of 2025, further solidifying this conclusion. The company's financial health remains stable with no significant changes in its total debt level. However, a notable absence is the explicit mention of interest expenses, which could be an indication that they have remained relatively low or are not a major concern for the company. Overall, this suggests a manageable financial situation for the company. Management's outlook and strategy. According to the financial summary, management is optimistic about the company's outlook and strategy. Key points include the adoption of ASU 2023-9 will have a significant impact on consolidated financial statements. Management has sufficient cash to fund current and long-term needs for several years. The company plans to expand its store presence with new openings and remodels, investing approximately $50–$55 million in capital expenditures. Management's focus is on driving income growth through increased gross profit margin and reduced expenses. There are no notable acquisitions or divestitures reported in the financial summary. The company's financial activities remain unchanged with regards to mergers and sales of business units. The company has a history of paying dividends to its shareholders. Specifically, for fiscal 2025 and fiscal 2024, the company paid out $0.35 per share and $0.70 per share respectively, totaling minus $53,447 in dividend payments. There is no indication that the company has engaged in share buybacks during this period. Concerns about inventory buildup and supply chain disruption, recent financial data highlights potential issues with inventory management and supply chain efficiency. Between February 1, 2025 and August 2, 2025, inventory levels increased from $120,789 to $142,486, indicating a significant buildup of stock. Furthermore, sales and cost of sales have risen by 6.3% and 5.1%, respectively, suggesting potential challenges in managing inventory effectively. The data also suggests that customer returns may exceed historical averages, with an adjustment of $9.4 million made for markdowns and slash or obsolescence as of August 2, 2025. These findings collectively point to concerns about inventory buildup or supply chain disruption, which could have significant implications for the company's operations and bottom line. That concludes the financial summary for Buckle Inc. Feel free to comment below, and I will be happy to answer them when possible.